Hi, I'm Chris Perkins. I'm the head of Franklin Crypto, and you're watching Taking Stock.
Reversal on the day, NVIDIA down 3%. 2 minutes ago, here into the closing bell from the trading floor of the one and only New York Stock Exchange, just about at session lows, with just a few minutes to go left in the trading day for the S&P 500, currently in the red, almost 0.8%. NVIDIA, the big factor, in the red itself, 3%. Oftentimes, Peter Tuchman, as NVIDIA, at least as the big splashy consolidated tech names go on a day like today, it's defensive, it's risk off. Not a big surprise to see the market following through with that.
No, not at all. I mean, the market, look, we have to realize that where we have come from, the fact that 0.08% of a market pullback is a nothing burger. Sorry to use that phrase, but it's true. The days we've been having have been so grand on the upside and on the downside. And when you have something like this, it's really the market just trying to figure out its footing, right? We're about to start anticipating a lot of earnings, which is the lifeblood of this market. And so people are sitting and waiting. It's like a pause moment. We're in the corridor. We've left one door behind, we're closing that one, we're yet to open the new one. And so people are kind of just trying to get their footing. It's the middle of July, it is summer. You know, there is a little bit of a wait and see feeling right here, and we're going to try and understand, because we're not clear about what the earnings are going to look like, right? It was a hard time. We're talking about the earnings that are going to be released are from that really rough time we had about a couple of months ago. So we don't really know what to expect, right? So many moving parts. I think people are sort of a hurry up and wait type of a situation.
We got the big bang start tomorrow. Peter Tuchman, thank you for being here. The team from Residio set now to do the closing bell. Residio doing the honors down here on the trading floor of the New York Stock Exchange. We'll give you your final tail of the tape for this Monday, July 13th. The S&P down just about 0.8%. The Dow Jones Industrial Average had started the day in positive territory. It didn't last long. We had some early morning reversals from names like Caterpillar as well as Goldman Sachs. The Dow finishing down 0.25%. The New York Stock Exchange Composite Index finishing down fractionally, and the small caps down about 0.8% as well. Very much a defensive risk off tape here on Wall Street to kick off this trading week, as Peter Tuchman and I were just breaking down energy, utilities, consumer staples, the outperformers in the S&P, and your S&P 500 laggards, tech, industrials, and consumer discretionary. Over to the Dow we go. Salesforce, Verizon, Chevron, some other oil energy names certainly outperforming on the day. Honeywell, Boeing, and NVIDIA seeing some selling pressure. Mag 7 tech stocks, kind of a mixed bag. Microsoft, the big winner on the day. Tesla and NVIDIA both down about 3% as we finish the trading day. Let's bring in my good friend Kristen Meyer. She is ETF editor-in-chief at Asset TV for her take on today's tape and much more. Thanks for being here.
Of course, anytime.
So let's start oil. I mean, my goodness, we got West Texas and Brent right here up. Every time I look today, up 7, 8, 9%
It's been popping
on
even
the day.
further throughout the
We've
day.
had a lot of days where oil goes up and stocks fall. What did you see today?
Yeah, well, obviously what we have with the U.S.-Iran war, both countries exchanging strikes, the president saying that we're going to be blockading the Strait of Hormuz, and obviously for anyone that hasn't been paying attention, a quarter of global oil trade actually goes through that shipping choke point, and so that's why we're seeing those oil prices absolutely ratchet up today. And today was the big question between AI trade, how much legs does that trade really have to run versus the jitters that we have in the Middle East. And what we saw today, obviously a lot of nervousness, a lot of anxiousness over the Middle East, over the tensions there, and then also a lot of anxiousness, again, over that AI trade. And that's why we're seeing some of those tech stocks, some of those memory chip stocks really taking a leg lower.
And
today.
a reminder, we're not out of the woods on the geopolitics, because for a while, obviously, it was front and center for the month of March. Then the market shrugged off what was going on with Iran, and we're reminded today investors can trade on that at basically at a moment's notice. Want your take on small caps?
Yeah.
What an impressive start here to 2026. What do you see in terms of rotation for the market?
Yeah, so they've had a really moment, I would say. We've actually seen a lot of outflows in small caps over the last couple of years, honestly, but just as, again, a reminder, let's put some numbers to this. Small caps right now, the Russell 2000 has been up about 17%. I was just checking before we came out, compared to the S&P 500, which is up only 9%. obviously taking a bigger hit today. So we've seen a lot more rotation into those small cap stocks, but particularly small cap ETFs, because I'm the ETF girl, right? And so we've definitely seen millions, hundreds of millions of inflows into those small cap ETFs, at least over the last 3 months. But again, at least when we're looking at some of those asset flows, they have been fairly flat. But again, we've seen a lot of earnings potential for those small caps. Valuations were still pretty cheap for small caps, and that's why it's been really taking in a lot of investor interest.
I want your take on the memory stocks. You and I are going to take a quick look here. How about year-to-date performance? SanDisk over 500%, Micron 216, Western Dig 210%, even Seagate 203%. Not just what you see in the memory names, but the ETF adjacent space for people that really want in on this action.
Yeah, so DRAM is really going to be your really big one. That's going to be a round hill memory ETF. That has pulled in, I believe, 22 billion year to date.
Wow.
I was checking some of those figures before, and so really the memory chips again has captured a lot of investor interest. But what we saw today and what we saw on Friday, SK Hynix really being introduced to the NASDAQ, of course, but again, they've been taking a leg lower today as there's been a lot of fears about how much more room there is to run on the AI trade. But I don't think that the memory chip is going anywhere right now. The AI build out is nowhere near close to being done, JD. And so we're going to be seeing a lot of investing all down that value chain. And so I would, if I had to put my predicting hat on, we're definitely going to be seeing billions more flowing into those memory chip ETFs.
I'm almost out of time. Got about 30 seconds left. Any other big catalysts on your radar you think our viewers would benefit from also paying close attention to?
Well, big week this week. We've got Kevin Warsh doing Fed testimony. You know, you and I always love to talk a little bit of politics. Obviously, we're going to see a lot of investors trying to pay attention to what's going to be happening to inflation, future path of interest rates. We've got CPI, we've got PPI coming out, and then again, Kevin Warsh's testimony. So I think it's going to be a really interesting week for politics and finance, seeing what happens coming out of the White House and how it's going to impact.
And that's our sweet spot. We love that area. We got Kevin Warsh.
We always love
Kevin Warsh in front of the House tomorrow, the Senate on Wednesday.
Yep.
Lots of headlines down in D.C. Kristen Myers, thank you for being here to kick off the show as always.
Happy to
nice
do it.
to see you. Robbie will grab your mic. Bobby will bring you this way. The top analyst calls. Thank you, Robbie. That moved the tape this morning on Wall Street. First up, J.P. Morgan. Thank you, Ian. Upgrading Amex to overweight. They say the stock is trading defensively. Shares of Amex in the red about 3% year to date. Next up, Jefferies upgrading Shopify to buy from hold. They cite robust fundamentals and several near-term tailwinds. We'll go this way here, Bob. Shopify down about 22% on the year. Finally, I'm going to take the chair with me because it's my show and I make up the rules. Oppenheimer reiterating Netflix as an outperform, but lowering the price target from 120 to 100. They say there are concerns about weaker viewership, but those concerns may be a bit overblown. Netflix set to report on Thursday. Bobby, we'll take a look at one stock that calls the New York Stock Exchange its home. It is Dollar General, having a nice tape today, up almost 4%. Back above the 200-day moving average for the first time since April. A more defensive day overall across Wall Street means outperformance from stocks like the dollar discounters, down 6% on the year, but kind of in a nice uptrend. It's been making higher highs and making higher lows since mid-May. And now in partnership with Monarch Markets, CEO Anthony Denier of Webull Financial and co-founder and CEO of Monarch Markets, Ben Haber, both sat down with FinTech TV's very own Johnny Fernandez. They discussed how their new partnership is expanding retail access to pre-IPO private companies. Take a look.
Biggest growth often happens when a company is still private, but that world has always been closed to everyday investors. Webull is changing that, and through a new partnership with Monarch Markets, qualified investors can now buy into private companies right from the app before they even go public. So here to explain how this works and what the risks are is Anthony Denier, CEO of Webull, and Ben Haber, co-founder and CEO of Monarch Markets. Guys, welcome to you both. So happy to have you guys here on the floor today.
Yeah, awesome to be here.
All right, so let's get started from the very beginning. The partnership between Webull and Monarch. How did that come together, and why is it now the most important moment to open up this pre-IPO access on the platform?
I mean, we've been working together for a long time. This is not something that just happened overnight. We've been working for years now to get this to market. So we're very, very excited because, I mean, IPOs, retail has always been the last one standing in getting into IPOs. Probably we've seen in the last 3 months, we've seen a lot of companies, issuers, allocating large portions of their IPOs, like we saw in SpaceX, right, to retail. That is new. But what retail is still getting pushed out of and not getting access to is pre-IPO or private companies. So very excited for this product.
So help us understand the bigger shift. What changed in the market that makes getting into companies before they actually go public so important for everyday investors right now?
I can touch on that. Yeah, so we've been seeing this trend for a while now. Companies are staying private for a lot longer. I think the average lifespan now of a private company is about 13 years. 10, 20 years ago, it was closer to 4 or 5 years. So that extra 8 years of private life for a company is where a lot of value is created. And I think another stat worth noting, 87% of companies today in the US doing over $100 million in revenue are private companies. And so if you think about the broader context of investing, that means if you want to really be investing in growth and generating alpha as an investor, you need to be allocating into private companies as well as public markets.
All right, so let's talk about access for investors specifically. Let's get to the practical aspect of it. If I'm a Webull user, walk me through what does IPO investing actually look like and what should I expect?
So pre-IPO investing, you must be an accredited investor, which is a self attestation, an indication process, and then once the deal closes, we'll allocate shares based on the indications of interest across the different clients of Weber.
Just to add on that as well, I think one of the unique innovations that Webull is really bringing to market is that pre-IPO access and leveraging Monarch's APIs is available inside the Webull app. And so that's a real differentiator from other ways that investors have been able to access private markets in the past. Now you can go on your Webull brokerage app that you use today to invest in public markets, options trading, fixed income, and access private markets in that same user experience. And so it makes it a lot easier for investors who are looking for that access but may not know where to go to find it, to just get that from the brokerage app that they already use today.
All right, so let's talk money because everyone wants to know what they get for their money and what happens to the money when they actually put it to use. So when someone is actually using the app, what could they actually learn about each private company inside the app?
Yeah, so we provide extensive research reports that are available directly in the Webull app that really give a good sense of what it is that you're investing in. And so that's research on private companies. There's a live price feed that provides real-time pricing updates for these private companies, which is a new innovation that I think is really worth noting. Historically, access to real pricing data for private companies has not been available, especially to everyday investors. Now that chart will be directly in your Webull app to be able to view the price of the companies that you're buying. And then on top of that, there's a news feed that gives you real-time updates as to what these private companies are doing. So it feels a lot like investing in a public security, but obviously these are private securities, private companies that people can now access.
Yeah, I mean, and just opening up and shedding light on the process. Private companies traditionally have been something that's always been in the dark, and there hasn't been a lot of clarity on what I own, how do I own it, where does it sit? And working with Monarch, that was one of our core propositions to our clients to make sure it was transparent and the process was transparent.
So I want to talk a little bit more about the real advantage of doing this through Webull versus somewhere else.
Well, first, we are a regulated broker-dealer. We protect our clients' assets, and we are responsible for making sure that those assets are safely held. If you're accessing private markets through a random website, there's really no proof that it is legitimate. And there have been a lot of schemes and fraud. So putting this process behind a regulated broker-dealer opens it up, sheds a lot more light on the process, and gives a whole lot more comfort to investors.
Thank you guys so much for joining us, and very excited to see where this goes in the next couple of years.
Thanks for having us.
Thank you so much.
Welcome back to the show. Joining me now live from the trading floor, not just a longtime friend of ours here on Taking Stock, but a friend of mine as well. Say hello to Andy Bayer, Managing Director of Asset Management at GSR. Nice to see you here as always.
Thank you for having me.
Let's start first and foremost. I always want your take, big picture, crypto price action for the long-term holders, so to speak.
Yeah.
And the people who see the headlines and they get a little freaked out. They're wondering what's going on here. How are you viewing the landscape
I'm
today?
just happy to be here after the quarter that crypto put in Q2. It was pretty dismal and brutal, and I think even the cheerleaders in the industry are kind of recognizing and taking stock of the fact that it was a pretty tough quarter. Prices were down, volatility was down. All the metrics of energy that we like to look at suffered. Perp funding rates, DeFi rates, volumes on exchanges, volumes on derivatives. So crypto does have about a 1 quarter attention span. So we are hoping that in July and in Q3 things start to look better.
You know, you get 10 points as a guest when you organically say the phrase taking stock in an answer on the show. So very grateful for that. I want your take on catalysts here, things that could better move the needle, presumably in the weeks and months ahead for the crypto majors.
It's a big week this week, right, with Chair Warsh speaking in Washington and the CPI number tomorrow. I think my personal take on this is that we're still climbing the hawkish wall of expectations, and until we sort of get over that summit and get into a zone where we can start to look forward to any kind of easing, Bitcoin in particular is going to have a tough slide, right? There are not too many environments in Bitcoin's history where we've had this kind of expectation of hikes, and Bitcoin likes real interest rates, not nominal interest rates going up. So if nominal interest rates are going to go up faster, that's going to be a headwind for Bitcoin. Others will follow, although there's so much good slow money news, integrations, blockchain adoption, things like that, that other tokens could take over and start to depart.
It is time for my obligatory Clarity Act update question of the day. Where are we? Where do we stand? How close are we to finally making this a reality? As I always like to point out, no easy task a few weeks ahead of the midterm elections.
I think, you know, my old Wall Street trader gut says the longer something takes to happen, the less likely it is to actually end up happening. Polymarket's putting odds on Clarity Act passing this year at 44%. That was up to 75% even as recently as May. Washington has just come back from the July 4th break. They only have until about August 7th to get a lot of things done. So some of my colleagues back at GSR are still kind of optimistic that things can get done. I think that the market would treat it as a positive surprise at this point.
Even if it is a bipartisan issue, which it certainly is, and there are not a lot of things on Capitol Hill in this ecosystem you could use the B word for, but general crypto blockchain technology support is one of those things.
You're preaching to the choir, and when you think about how positive and healthy all of the regulatory changes have been happening, the CFTC and SEC harmonizing around rules, a lot more capital has returned to the United States, a lot more activity. Exchanges like New York Stock Exchange and whatever other stock exchanges there might be are getting integrated and thinking about, many of the centralized exchange new listings this year have been tokenized equities instead of crypto tokens, just to show, how much this blockchain technology means. There's, a little bit of hair still on the issues around ethics. And around, once these rule changes become encased in law, they're encased in law. So it's still a big deal. A lot of work needs to be done. Gosh, I hope we're productive over the next 3 weeks, but I still think the market's going to be surprised if it sails through.
Andy Bayer of GSR, come back on the show anytime. Nice to see you, my friend.
Thanks, JD.
Don't go anywhere. A lot more Taking Stock coming up live from the trading floor of the big board right after this. Time now for a few headlines in the world of fintech, crypto, and artificial intelligence you need to know for your Monday afternoon. At this hour, the crypto majors all underwater between 2 and 4%. Bitcoin hovering just a hair above 62,000. Next up, JP Morgan, B of A, Citi, other major banks building a shared blockchain-based payments network for tokenized deposits to compete with the rapidly growing stablecoin market. And finally, Meta set to invest another $40 billion in its Louisiana AI campus, pushing the project's expected value above $250 billion as it expands its AI computing infrastructure. Last week on the J.D. Durkin Show here from the New York Stock Exchange, I caught up with the great Ross Mack on everything from Microsoft to the money mistakes he sees too many families still making while trying to build generational wealth. Take a look. Quick thoughts on Microsoft, I wonder, because that's been, last year Amazon was the big laggard. It's played a little bit of catch up, but right now the most beleaguered Mag 7 name is Microsoft.
Yeah, not to talk my book, but I recently got into some Microsoft calls, longer dated, and I do believe that they're up like 40-50% right now. And what I will say is that I think Microsoft is extremely cheap. I think relative to historical norms, I think that they obviously have a strong moat. I do believe they're going to be a leader in AI, software, et cetera. I think what happened is when the overall software names sold off, it was kind of a baby getting thrown out with the bathwater, so to speak, and Microsoft kind of got caught up in that. But I think people need to take a step back and understand they're Microsoft. They have a lot of great things going, and the proof's in the pudding. I might double down and even put in more.
Let's talk about personal finance, because I know that this is really important to you. It's important to your family. You're pretty unrivaled in terms of being an incredible storyteller and a content creator in this space, because so much of what you do involves your family. First, Ross Mack, what is one investing mistake that you see too many families continue to make as they try to build generational wealth?
The most expensive mistake is, I'll do that later. I'll do it tomorrow. I'll invest when I get more money. I'll do this next year. And what happens is time is on your side the younger you are, and that goes from healthy. The younger you are, things are less expensive from a insurance standpoint. And in terms of I'll invest next year or when I get paid, the moment the moment you make the decision of procrastinating and hesitating, you miss out on the upside of the market. I had a conversation just last week where someone was like, all the media was saying, that the market is too rich, so I decided not to invest. I said, yeah, well, you missed out on, over 20% of upside. And so time is on your side. So you don't want to sit on the sidelines. And so as any person that's starting a family, right, I think, or has a family, I think it's very important to give your kids the opportunities you didn't have, give them the ability to go to college and graduate without student loans, right? Because you've already had a fully funded, right, 529 account. You have them a custodial account, a custodial Roth IRA, right? And so I think it's important that you start structuring as a family different strategies so that your kids have more opportunities than you yourself had.
Dude, what's your take on the Trump accounts?
I think it's a win. I think the ability for anyone, the only thing I'm upset about is I have 3 kids and none of them were born last year. And so the stats are for, the beginning of 2025 to the end of 2028. If you have a child that is born, you get $1,000 free, right? And so I was doing the math. At a minimum, if you don't add a dollar, right, and you have a newborn child, when they get to retirement age, they'll have over $250,000 just through the power of compounding. And so I do believe it is something that is, remarkable. Free money. I never turn down free money. Well, I get all money isn't good money, but free money in this instance is a great opportunity to help you jumpstart your kids' future and hopefully help you build generational wealth. So I agree. And I also believe the family should add more to it, not just have $1,000. You can add up to, I want to say, $5K.
Yeah, well said. Ross Mack, what is one investment lesson every parent should be teaching their children at an early age?
I think everyone needs to teach their kids the expense management, right? Impulse the ability to keep their impulse shopping down, right? And so my kids, they're in summer camp, and one of the things we do is they have trips maybe 3 times a week, but all these trips cost extra money. And so I ask my kids, which trip do you want to go to? Because you're not able to go to the other 2. And so just something as simple as that is teaching them, you know, the power of a dollar and helping them understand money doesn't grow on trees. And I think that is a lasting impact that, you know, people will grow up knowing, like, okay, I just can't spend money frivolously.
I'm Scarlett Sieber from Money 2020, and this is Jargon Translator. Today's term is reflexivity, and it explains why markets don't just reflect reality, they shape it. Reflexivity describes a feedback loop between perception and outcome. When people believe something is valuable, they act on that belief. Those actions then make it more valuable, at least for a while. Prices influence behavior, behavior influences fundamentals, and then the fundamentals influence the prices again. So that loop, it can work both ways. So rising asset prices, things when lower borrowing costs, increase confidence, attract more capital. Falling prices do the opposite of that. This is why bubbles inflate faster than logic suggests, and why crashes, they feel sudden. Reflexivity also explains why markets can overshoot in both directions. In finance, expectations don't just predict the future, they participate in creating it. Fast forward to today, reflexivity is visible in venture funding cycles, housing markets, and tech valuations. Capital availability changes outcomes until it doesn't. Reflexivity isn't irrational, it's human, and understanding it helps explain why markets rarely move in straight lines. They're a lot more curvy than that. And with that, that is your Jargon Translated. If there's a market behavior you want unpacked, put it in the comments, and it might just make the cut. In the meantime, back over to you.
Tomorrow morning, all Wall Street, we will get the kickoff to earnings season. We'll hear from Citi, Goldman, JPM, B of A, as well as Wells Fargo. 8:30 a.m., the CPI inflation print, and Fed Chairman Kevin Warsh testifies to the U.S. House of Representatives. Thanks for watching Taking Stock. Have a great Monday night. We'll see you again tomorrow.